Well, making sense of the markets, our next guest believes that cycles tell it all. Joining us this morning is Professor Charles Nenner of Touro College, a friend of Squawk who's made some prophetic calls this year in everything from equities to commodities. In fact, Charles, is it true that you called the summer lows around August 18th, before that happened this year?
Yes, exactly then.
What gave you that signal?
Well, the whole system is based on the fact that everything is determined. I don't believe in any economic influences. So it's a closed mathematical box.
You believe that even the Fed has no real say over what the economy or the markets... Is it the economy or the markets? Which is it?
No, it's the economy goes in cycles.
Right.
And the predictable. And the Fed is just, fine-tuning a little bit. And Greenspan once said, talking about the 4-year cycle in stock market, I remember he said, even in Congress, there's not much the Fed can do about it. It continues to be a fixed cycle. So the two things you can do, you can believe in a fixed cycle, then you don't have to look in all these indicators, or you don't believe in it, and then everything is new every day, and who knows that you make the right interpretation.
But there are some things that the Fed can do to mess it up, aren't there, if they did the wrong policy?
I tell you, in the July last year, there was a correction, went around 10,000, and I came here, I said, by the end of this week, we start going up. The target is 14,500. That's for the year 07. And I told my clients we're 14,300 something, we're only 1% below the target, everybody out.
So how do you come to this number? It's just a mathematical equation
It's just a mathematical, and you know the time when it's going to happen. So you know the time of the low, you know the time of the high, you know the level of the low and the level of the high.
So have you never lost money in the markets because you just trade the charts and you've never lost, ever? You've never made the wrong bet?
Let me see that. If you would look in my record, let's say for the last 10 years, it's very hard to find a losing trade.
What does, all right, you heard what Luis Yamada was saying earlier with your charts. What do you see about the markets over the next, say 3 to 6 months?
Okay, now, so we hit my price target upside.
Which was 14.5?
We hit 14,003, but the target's 45,000.
Okay, right.
So we went out, everybody out. And then I said we want to go in for year-end rally around the middle of December. And I think with a year-end rally, and things start to be very tough in the February-March period.
So is the rally we're in right now, have we seen the most of it, or is there more to go?
No, there's still more to go.
How much?
We could test that high one more time.
You think we could go back to 14.3?
Yeah, we could still go there one more time.
No higher than that?
No, that's my target. And next year is going to be very volatile. I see 3 or 4 intermediate corrections of 10, 15%. 50% down, 50% up, 50% down, 3 or 4 times. And in the end, we're not going to really sell off, but it's going to be very difficult to make money.
Gains for the year in 08, you think we end the year flat?
Flat, after having 3, 4 corrections, everybody being shaken out and try to bite the bottom again. It's one of the most difficult years to go.
So I can either try to bet on these, or I could just stay, and then my money is
but the problem is, and I know it's not something you hear about, I'm talking about deflation, not about inflation. I think deflation is going to be the problem. We're right on the edge of deflation. If oil price wouldn't be up the last half year and food prices were being deflation.
Well, wait a minute. Economics don't matter. Oil prices, deflation doesn't matter at all. It's all dictated by the close path of mathematics. So why would you even cite that?
Because I like to
it.
explain to you why it's going to be a difficult market, because there's going to be deflation scare. I still have to talk in normal wording to people, right?
But do you look at that stuff at all?
Yeah, I look at the stuff because people want to know if there's going to be inflation, deflation, oil price.
Well, isn't the sentiment that controls the technical analysis is based on human behavior anyway, responding to fundamentals, right? I mean, it's all holistically, it's all one big thing.
Yeah, but the interesting thing is, if I started at 10,000 and went to 40,300, whatever happened economically in the meantime didn't have anything to do with it. It went there anyway.
Charles, we've got to go, but interesting stuff. But we'll look for 14.3, your next target, before we see a volatile 08. Thanks for coming in. Always good to see you, Charles.